Welcome to our latest market analysis. Today, we're diving into the recent developments surrounding Super Microcomputer, Inc., NASDAQ, SMCI, and what they mean for investors. Super Microcomputer, Inc., NASDAQ, SMCI has experienced a notable upswing in its stock value, rising 6.1% last Friday. During the session, the stock hit an intraday peak of $30.09 before closing at $30.40. This movement occurred with a trading volume of 14,620,709 shares, significantly below its average daily volume of 31,633,107 shares, marking a 54% decline. With such momentum, investors are now questioning whether SMCI remains a worthwhile investment at its current valuation. Let's delve into the details. SMCI has been the subject of numerous research reports from leading Wall Street firms, reflecting a mix of perspectives on its future performance. Goldman Sachs recently adjusted its outlook on SMCI, reducing its price target from $67.50 to $28 while maintaining a neutral stance. This suggests the firm perceives certain risks in SMCI's valuation and future prospects. Similarly, StockNews.com issued a downgrade on October 9th, shifting SMCI's rating from hold to sell, implying that investors may want to reevaluate their positions in the stock. JP Morgan Chase and Company followed suit by adjusting SMCI's rating from neutral to underweight, while simultaneously lowering its price target from $50 to $23, signaling concerns regarding the company's ability to sustain its growth trajectory. However, Northland Capital Markets took a more optimistic view, upgrading SMCI to a strong buy rating on December 20th, indicating confidence in its long-term potential. Meanwhile, Wedbush maintained a neutral rating in its November 4th report, but revised its price target downward from $62 to $32. This suggests that while the company holds value, its potential for significant gains remains uncertain. According to MarketBeat.com, SMCI currently holds a consensus hold rating. Among analysts covering the stock, 3 have issued a sell recommendation, 11 suggest holding, 4 advocate buying, and 1 has assigned a strong buy rating. The average consensus price target stands at $62.89. Over recent months, SMCI's stock has exhibited volatility, with its 50-day simple moving average at $34 and its 200-day simple moving average at $43.38. The declines in these averages indicate ongoing downward trends in the stock price. Despite the volatility, Super Microcomputer retains a solid market capitalization of $16.24 billion. Furthermore, its price-to-earnings PE ratio sits at 14.55, suggesting a reasonable valuation based on earnings. With a beta of 1.31, the stock is slightly more volatile than the broader market, meaning investors should be prepared for price fluctuations. From a financial standpoint, SMCI is in a strong liquidity position. The company's quick ratio stands at 1.93, while its current ratio is 3.77, reflecting a healthy balance sheet with sufficient short-term assets to cover liabilities. Additionally, its debt-to-equity ratio of 0.32 suggests conservative debt usage, reinforcing long-term financial stability. A major driver of SMCI's stock movement is the increasing demand for high-performance computing solutions. The rapid growth of artificial intelligence (AI), machine learning, and cloud computing has positioned companies like SMCI, which specializes in advanced server technology and IT infrastructure, to capitalize on industry expansion. Investors are closely monitoring SMCI's earnings performance to assess its ability to sustain growth. The company has posted strong revenue figures in recent quarters, driven by heightened demand for its products. However, concerns over profitability, supply chain constraints, and broader economic headwinds have led analysts to moderate their expectations. Operating in a highly competitive industry, SMCI faces challenges from major players such as Dell Technologies NYSE, Dell and Hewlett-Packard Enterprise NYSE HPE. To maintain its market position, the company must continue innovating and expanding its presence. Its recent investments in next-generation server technology may provide a competitive edge, but successful execution will be crucial. Macroeconomic conditions also play a significant role in SMCI's stock trajectory. Rising interest rates and fears of an economic slowdown could impact corporate budgets for its infrastructure, potentially reducing demand for SMCI's offerings. Additionally, global supply chain disruptions remain a persistent concern for hardware manufacturers. Bull case: why investors may consider buying. Strong presence in the growing AI and data center markets. Solid liquidity position with manageable debt levels. Potential for continued revenue growth if demand stays robust. Northland Capital Markets' recent upgrade to strong buy signals confidence. Bear case: why investors might be cautious. Multiple analyst downgrades highlight valuation concerns. Intense competition from larger technology firms. Uncertainty surrounding macroeconomic factors and IT spending trends. Recent downward movement in key moving averages suggests potential volatility. Supermicrocomputer NASDAQ, SMCI remains a company with promising growth prospects, particularly as demand for high-performance computing continues to expand. However, its recent stock fluctuations and mixed analyst sentiment suggest that investors should exercise caution. Those with a long-term perspective and higher risk tolerance may find opportunities in SMCI, while others might prefer to wait for a clearer market trend before making an investment decision. As always, conducting thorough research, evaluating risks, and aligning investment decisions with personal financial goals are essential steps before committing to any stock purchase. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.